Hey everybody, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making money, this is the channel for you. Subscribe, give me a thumbs up, leave comments below on what you guys want to know. I'm going to answer some more questions. Great content as usual. A question and a request. When you point to a chart and it's already broken out of its chart pattern, how do you know if it's still a good time to jump in? And my request is for a show on your chart tools and other tools. Thank you. So I'm going to talk about the psychological chart breaks, and then if it's still a good value. So those two things. So another question had asked, why are we buying? Like, what do chart patterns mean? You know, what's the basics of technical analysis? And what happens is when you look at charts or prices, it's price charts. We look at, we'll call it the collective cycle. So we're looking at human beings interacting with each other, buyers and sellers. And when you get into areas where there's a lot of buying and selling, that means the price goes up and down many times. And depending on the volume of that channel, we'll call it, the volume inside this channel is an area where we could potentially call it resistance. So if we fall below that channel and then we're coming back through that channel, if there's a lot of volume there and a lot of price changes, so the price moved down and then it moves up and then it moves down, it moves up, it means that buyers and sellers exist in that channel, and there could be a whole bunch if the volume is very high. So when price comes back through that channel, it's going to have to meet a bunch of previous buyers and sellers. That stock, people who hold stock in that company, bought it in that channel. And in that channel, they're more than likely going to sell or buy in that channel again. Now, when it comes down, they'll sell it in the channel, and then it'll go down. And when it goes back up, they're going to say, when it reaches $4 again, I'm going to sell my stock. And then it goes back through that channel where it's $4 and you have a bunch of sellers. It's got to go, that price has to go through a bunch of selling volume before it can break through that channel. It might get stuck in the channel for a little while. That's because of the previous buyers and sellers that exist in that channel from an earlier historical, we'll call it buying and selling channel. So when we look at chart patterns, it's the collective, it's basically the collective, it's market psychology, the collective thought, the collective battles, we'll call it, in terms of buyers and sellers battling each other in certain areas. It's a containment on price. So it's a psychological containment, and that psychological containment is the grouping of all of the buyers and sellers and owners of that stock in certain price areas, depending on the volume and what happened in those areas previously of the stock price. So when a price comes down and we're buying these things towards bottoms, we're going to have to come up and through all of those areas. Like an oil company, they're going to have to come up through all of the previous battles and channels and congestion areas on the way up. And when we can clear certain areas based off of chart patterns, and those chart patterns are telling us where those psychological areas potentially could be, is we come up through those areas, we get some resistance, and when we break those resistance areas, the price just flies because there's no resistance. And that's when people say, well, there's resistance here. It's because of the previous buying and selling that happened in that stock earlier in time. Now, the further in history, there's probably less buyers and sellers at that price. They're kind of already out of the stock already. But if it's a recent one over the past year or two, you're going to see sellers, you're going to see more resistance. So what I look for are gigantic chart break patterns because it's saying that there's no resistance left. It's about to break. It's about to break the psychological containment on price, the market psychology that's containing the price down, that resistance that it has to work through. Hopefully I did a good enough job explaining that. So I'm looking not only at value, but I'm looking at the technicals and saying, holy crap, we better buy this now before it breaks and really starts to move. Appia Energy was one of them. A lot of the cannabis stocks, they broke through there. We'll call it psychological containment areas where a lot of sellers existed. And then a lot of those sellers turned into buyers. And then you got the people who look for momentum. They're usually retail, sometimes institutional investors. They all pile in when they see something moving up at a great speed because they chase momentum and price. We don't chase momentum and price. At least I don't. I buy it before the break. I buy it when it's cheap. My shares are dirt cheap. And then I let everyone else chase it and drive the price higher, giving me all that value. So that's the whole point of this channel. That's why it's called Finding Value, is basically finding the value before everyone else, investing in it when it's cheap. You get your low cost basis, and then you can get your multiples when it goes up in terms of a 10x, 20x, 30x. That's a 10 bagger, 20 bagger, 30 bagger. And that's why we call it cheetahs, because they like to run after the psychological containment of that chart pattern ceases to exist on price. Then it just flies higher. So that's that portion. Now, value is when you want to buy it, even if you have a chart break. So what you want to do is you want to see ones that are close to breaking. You get in before it. And even if it were to break and move up some, it's still a good value because the value is the ratio. The ratio is an asset priced against an asset compared to history. And when that asset's cheap, when it's down in the ground and you're looking at it going, man, that thing's so cheap, you want to buy it when it's cheap. Uranium is still dirt cheap. Dirt cheap. Oil is dirt cheap. Oil and uranium are still dirt cheap. And these things are starting to come up. And what you do is you buy them. That's not a recommendation. I can't do financial advice. But I just buy them even if they're coming up. I cost average in. I get my shares and I just hold on. Even if there's a chart break, I still buy it because of the ratio. And the ratio is so stinking cheap. The valuations are so cheap, they are still good to buy. And when I stop buying is when those ratios become fairly valued. And fairly valued for oil is a ratio against gold, I would say of about 15 to 20, somewhere in that range is about a medium value. We're up above 30. Above 30 is dirt cheap. Uranium's over 60. That is ridiculous. I mean, you put uranium in the trash, and they put the trash in the trash, and they put the trash in the trash. That's how cheap it is. That's like throwing 3 trashes down. So I would still be buying them. That's me, and it's not financial advice. And I think you're still getting an absolute steal. Plus, from a psychological, emotional standpoint, they're far easier to buy right when they break because you're going to see your account go up like real time. It's like, boom, it starts going up right when you buy it, and it continues to go up. So from a psychological standpoint, when I'm giving these big chart breaks, people get excited over price movements. So I'm trying to psychologically boost everyone by giving them a 20, 30, 40, 50, 60, maybe even 150% gain right off the bat so that they can hold these stocks much easier than, say, buying where I might buy, where it's down in the dirt and it's not really doing anything. It doesn't excite anybody. And it won't excite anybody because I'm waiting for the breakout. But I'm buying them on the cheap of the cheap. So I might be buying them at $1 and I might be selling, maybe some other people, since from a psychological standpoint, it's easier when they buy on the breakout, and it might be like 25 cents, 50 cents higher. So it might be a 25 to 50% premium on it. But even though you're buying it at that price, it might still go to $3, $4, $5 in the short run, the short term. So that's why on some of these, I'm looking at chart patterns, I'm looking for breaks, and I'm trying to have it where it's psychologically easier for the channel to hold them. I must be a rare breed because I can buy these things and just freaking hold on. Like I see the value. I was buying platinum in 2019, 2020. I was buying into weakness, but I saw the ratio. It was so cheap, and I'm like, I can't not buy this. I'm buying at $700 an ounce for platinum. I'm like, this is cheap. I'm buying the living hell out of this. I don't care where it goes. It's far below the mining costs, which are the high cost producers are $1,200 an ounce, and I'm buying it for $700. I'm like, give me thousands of this dollar. I mean, I dumped in. It's like, let's go. Let's just keep going. Buy. And then when the value starts coming back up, I don't buy as much, and I look for other opportunities. And if other opportunities present themselves, like SM Energy was in October, November of last year, I was like, man, this is great. I got to put money in that. So I started dumping all my money into those better opportunities. So it's still good. everything's good. I look for the psychological breaks so the price can move up. That's how I'm doing it on this channel. Everything that if you're seeing this, a company on this channel, it's probably because it's so undervalued. I'm not putting overvalued companies outside of ones that I'm actively commenting on that are looking tired. Doesn't mean we're at a top yet. I don't think we're at a top yet, but they're looking tired in terms of tech stocks. Those I wouldn't be buying. I would be buying the commodity-based stuff. If you guys like this content, give me a thumbs up. Leave comments below on what you guys want to know. Subscribe to the channel if you haven't. I don't know what you're waiting for. And thank you for listening. This is Finding Value.